because all these have a relevance in determination of value. Now, first, when we talk about the consideration, as you know, it is consideration means we have to pay a reasonable amount to the supplier so that he can supply the goods. That means we are receiving the goods. In return, we have to pay him either a money or kind, whatever may be. So, any payment made or to be made, whether in money or otherwise, in respect of, in response of, or for the inducement of supply of goods or services or both, whether by the recipient or by any other person, but shall not include any subsidy given by the central government or the state government. So it should be money. What do you mean by money? Money means any Indian legal tender or any foreign currency or a check or a promissory note or a bill of exchange or a letter of credit or a draft or a pay order or a traveler's check or a money order or a postal or electronic remittance or any other instrument recognized by RBI. This is defined as a money. Now, the next, what he says, it should be a consideration. So, we are talking about the consideration which is to be paid in money. The next, the monetary value or of any act in respect of or in response to or for the inducement of supply of goods or services or both, whether by the recipient or by any other person, but shall not include any subsidy given by the central government or the state government. So here, subsidy will not be included, but it should be some amount in the monetary value need to be given to the person who has supplied the goods or services. So this also to be considered. So first of all, when we talk about goods, supply of goods, that means what do you mean by goods? We need to know. So the goods means every kind of movable property other than money and securities. But it includes actionable claim, growing crops, grass, things attached to or forming a part of the land which are agreed to be served before supply or under a contract of supply. So goods should be movable. It should not be immovable. If it is movable, then it is called as goods. Securities cannot be called as goods. That means the shares, whatever the in the stock exchange, whatever may be the transactions are taking place, those transactions will not be treated as goods. So you may be purchasing the shares or the securities, government bonds, equity shares, preference shares, whatever may be, which has been transactions which are taking place in a stock exchange will not come under the definition of goods. Now, but the definition of goods says includes actionable claims. Actionable claims is nothing but a right on certain goods. So that right, you are not talking about the goods here. You may be talking about the right. That right can also be included as goods. Growing crops like timber. Timber will be taken on contract. They may grow and they will supply to the person who wants that timber. So in such cases, growing timber is also called as a goods. Now the grass, even the grass is also being grown and it is being supplied. And things attached to or forming a part of the land. So usually whatever may be the commodities, without taking the support of the land, you cannot grow it, you cannot supply. That's the reason why he says anything which is attached or forming a part of a land, that is also treated as a goods. And they also say it should be on contract. So that means before growing you have to enter into a contract stating that because of that contract we have to supply. That's the reason why this has been taken up. So they have to have a contract for the supply of such goods. This is a definition of goods under the law. The next he says about market value. What do you mean by a market value? Here, full amount which a recipient of a supply is required to pay in order to obtain the goods. So whenever we want to obtain either a goods or a services or a both, we have to pay an amount, a full amount. So both like a kind, so kind also, or a quality at which the amount, whatever the full amount you are paying, both at the same time, commercial level, where the recipient and the supplier are not related. The recipient is the person who is receiving, and the supplier is the one who is supplying. So both of them should not be a related. Yesterday also we were discussing what do you mean by a related. So let us see who are the persons who are related and who are the persons who are not related. Before to see that, we need to know who can be called as a person. Now, in the Income Tax Act, also the person is being defined. The same thing is also hold good here to define the person. Person includes an individual, a Hindu undivided family, a company. Company is treated as an artificial person, so company also can be called as a person, a firm, a local authority, a limited liability partnership, an association of persons or a body of individuals, whether incorporated or not, in India or outside the India, any corporation established under any central act or the state act or the provisional act, or a government company as defined under section 2 subsection 45 of the Companies Act 2013. Any body corporate incorporated by or under the laws of country outside India, a cooperative society registered under any law relating to the Cooperative Societies Act, a local authority, a central government or a state government, a society which is defined under the Societies Registration Act 1860, trust, or every artificial judicial person not falling within any of the above. So all these are called as a person even under the income tax. Even the same thing is hold good even under the VAS, GST. So you have to take the first, this is a person. The next, he should not be a related person. So, whatever may be the transactions which are taking place between the two people, the buyer and the seller, supplier and the distributor, the supplier and the recipient, whoever may be, whatever the name called, the person shall be deemed to be a related person. Such persons or officers or directors of one another companies. Like I may be a director in your company and you may be a director in my company. Then I and we completely called as a related person. So always treat to it that I should not have any uh, partnership or hold relating to your company, nor you should not have any uh, hold in my company. Then we both to be called as unrelated person. If we have a hold, then automatically will be called as a related person. Then the next they say the persons are legally recognized partners in business. If both of them are partners in any business, they are legally binding. In such case, they are called as a related persons. The next persons are employer and employee. Master and servant relationship does not exist. Any person directly or indirectly owns or control or holds 25% or more out of the outstanding voting stock or shares of both of them. So I should not have hold on your company. You should not have a hold on my company. Either of this is also will be treated as the related person. Now, they should not have directly or indirectly to control the other. And one more thing they have to take into the account, directly or indirectly controlled by a third party, even that should not be there. See, I may not directly related to you, you may not be directly related to me, but we both will be related to a third party, and the third party is holding both of us, then even then we both to be called as a related person. The next, they say that the person who are associated in the business one another as a sole agent or a sole distributor or a sole concessionary, what whosoever described of the other shall be deemed to be a related. Then first of all we need to know who can be called as an agent. Here sole agent agent means a person including a factor, a broker, a commission agent, a Deltrader agent, an auctioneer, or any other mercantile agent by whatever the name called, who carries on business of supply or recipient of goods or services or both on behalf of another. So here, uh, name can be anything. He can be a factor or he can be a broker. Broker here, the person who is working on the basis of commission or a commission agent. He may be called as a commission agent. So he's working on the basis of commission or a Deltrader agent. You might have studied the Deltrader agent in consignment under the accounts. Deltrader agent means what? That means he's doing the business on the behalf of the principal, and also he is giving a guarantee on the debts. He is giving either a warranty or a guarantee relating to the debts. So in such cases, he'll get an additional commission apart from the business. So he will be called as a Deltrader agent. Hope you remember this. The next is auctioneer. The person who is conducting an auction, he'll be called as an auctioneer. A mercantile agent. The mercantile agent is an agent defined under the mercantile law. So all these are whatever the name called, but he'll be called as an agent. So he'll be doing the business on behalf of the principal. That's the reason why the agent, he should not be a sole agent. So that is also to be considered here for the determination of value. Right. So now let us see what is transaction value, because to determine the value of goods and supply services we need to know what do you mean by a transaction value. Here the transaction value, the value of goods, the value of supply of goods or services or both shall be the transaction value, which is the price actually paid or payable for the said supply of goods or services or both, when a supplier and the recipient of the supply are not related, and the price of the sole consideration for the supply. So here transaction value will be taking into the account. So here transaction value means as and when a sale has taken place or a supply has taken place, you will be getting a consideration out of that. So all those transactions taking all those values, we will call it as a transaction value. You may be paid, you may be given a guarantee that you will be paying afterwards. So that is also will be considered. So that's the reason why they'll take all this into the account. It is called as a transaction value. See, between the two persons, they should not be related to each other. That is one. So related person, who can be called as a related person, that we have already seen. So that's the reason why they should not be a related person. but there should be a two persons, and the price should be a sole consideration. You also have seen what do you mean by a consideration. So these two elements supposed to be there in the transaction value, then it is called as a transaction value. Then what are to be included in the transaction value? Now, when we want to assess the transaction value, the taxable value includes certain elements. What are those elements? The first element is the price actually paid or payable for the supply. So they have paid, they may going to pay. This is first element. Second element is any taxes, duties, fees, charges levied under any statute other than CGST or SGST or Union Territory GST Act or GST Compensation to States Act. Here, taxes already you are levying. So you should not take whatever you have levied. You should not, other than the taxes only, you have to calculate as a transaction value. Now, already duties might have paid, like manufacture. Once the commodity is manufactured, we are supposed to levy excise duty. That duty is involved in the manufacturing cost. So, in such a case, the duties should be eliminated or the duties can be included because uh, after the duty only you will be able to say this is a total manufacturing cost. So he says that any taxes like octroi duty can be paid, any import taxes might be taken for the machinery to be imported. Without that machinery, you cannot manufacture the product. So that's the reason why machinery is important. So when you want to import the machinery, you might have paid customs duty. So, customs duty you might have paid, excise duty you might have paid, octroi taxes might have been paid, some fees may be charged like royalty, etc. might have taken place because to produce a product we require some formula. That formula, whoever might be invented, we are supposed to pay the royalty for them, right? So that can be a fees. So fees, charges, whatever may be levied. Without that, you cannot convert the raw material into a finished product. So these expenses, these liabilities, these taxes are important. So these can be included in your transaction value. So this is second element need to be taken care. The third one is payment to third parties. What kind of payment you will be paying to the third parties? Here, usually what happens is any amount which is paid to a supplier. Why you are paying? Because it has been incurred by the recipient, but it should not be included in the price. The recipient on request, he say that the product should be given an extra care. Already a minimum will be taken care of by the supplier. But once the recipient agreed to purchase the commodity, probably he wants that extra care or extra protection or extra package, maybe uh, requested the supplier to do. In such cases, the recipient is requesting the supplier to do. In such case, probably that extra payment, if it is made by the recipient, then that should not be included. Whereas that is required, the supplier cannot able to do it. Probably he might have taken from the recipient. So that amount, if it is required to a product, it can be included. So you have to decide what is to be included, what not to be included. The next incidental expenses like commission, packing, now we have a packing is also two or three types of packings we have. Primary packing, secondary packing, special secondary packing. Like this, the packing materials can be used. Primary packing, like you take an example of toothpaste. Now, whatever the tube, Without the tube, the toothpaste cannot be sent to the market. Or a coconut oil, if you take into the account, the coconut oil without the container, you cannot send it to the market because it is a liquid form. So you need to require a primary packing that is required. So that should be included in the cost of or the value of the goods. Now, the secondary packing also. Secondary packing here is the toothpaste is put it in the uh, in a card, right? It is in a like carton. That carton is to protect the tube. That is the reason why it is being kept. So definitely here what happens is the secondary packing is also whether required for a product or not. If it is required to the product, it has to be included. If it is not required, then it cannot be included in your transaction value. A special secondary packing is the over and above first primary, secondary, and the special secondary packing may be taken care of. In such a case, also people need to see whether it is necessary for the product or not. If it is necessary, include in your transaction value. If it is not necessary, it cannot be included. But now you take a cylinder. Cylinder has a durable packing, but that is a must. That becomes a primary packing. The secondary packing will not be there for the cylinder. So that is one which you have to take into the account. Probably a deposit will be considered for the cylinder. So here the deposit is only once in the lifetime. It is not every time will be taken. In such cases, the cost is different and deposit is different. So automatically the cost is only for the gas which we are paying, but not for the packing. That is a cylinder. We are not paying anything. That is only what you are doing. You are exchanging the cylinder as and when there is a required. So automatically we are using the gas inside the cylinder, and once the gas is over, the cylinder is returned and again you are taking the one. So it's a reason why here whatever the cost you are paying, that is only for the gas, not for the cylinder. So in such cases, that is required a durable commodity, durable packing it is. So that may be taken only once in the beginning of the product to be purchased, not every time. So such kind of values should be included or not to be included. Even that is also need to be taken care of. The next, any interest or a late fee uh, or a penalty for a delayed payments of consideration. There could be an interest fee, a late fee or a payment penalty, all that will be there. So all that is also whether how far it is required for a product that you have to take in care and it is to be added or included or not, that to be decided. The next, subsidies provided in any manner, like linked to the price other than the subsidies given by the state or the central government. Now, on gas, subsidy was given, probably 40 rupees, 30 rupees, whatever may be, which is credited by the government. Now, Telangana government, before to form, they have given you that they'll give you a cylinder for 500 rupees. That means usually the cylinder cost is 900. Out of that 500 only, if they are providing that 400 difference which we have, that can be taken as a subsidy. So that subsidy also should be included. Why? Because in factory cost, if you take it is the cost is totally 900, but the government is giving a subsidy. That's the reason why uh, it is being given at a lower cost. So that subsidy should be added or included in the price because that is given by the state government. So all these are supposed to be included in the determination of value. Now, what are the exclusions we have to consider regarding to transaction value? Now, regarding to the exclusions, one is discount. So discounts like cash discount, you may have trade discount, you may have. So, cash discount, trade discount, whatever may be which is allowed, it should be excluded from the determination of value. Now, uh, probably if you are purchasing in a high quantity, huge quantity, he may give you a discount. So that discount also should be excluded. That is being done because he want to see to it that he can sell the commodities in a huge bulk manner. That's the reason why he may be giving, or the discount is may be given because he is a regular customer, or discount may be given because it is a unknown season, or like summer, winter, whatever may be. If it is on season, off season, if you take into the account, because of that season also, if any discount is being allowed, such discounts need to be excluded from the value of transaction value. So, at the time of the supply, before the supply, or after the supply, any discounts which are being allowed, it should be shown in the invoice or in the terms of an agreement existed or not. That is also need to be taken, whether it is linked to the invoice. Proportionately, ITC may be reversed by the recipient, even that is also to be taken care. If discounts are not included in the value of supply, then you have to see to it that the discount included or not. Even that is also need to be taken care for the determination of value of supply. The next they say about now value of supply under section 15. They say whether the supply is a sole consideration or not, whether the supplier and the recipient are related or not, whether the supply is notified supply under section 15 subsection 5 or not. What is accessible value? Accessible value or a transaction value, both are one and the same, because transaction value is the recent development. Earlier we used to have accessible value. And what are the elements which are specified under section 15 subsection 2 and subsection 3, that is also need to be considered. The next we need to see to it that whether he is a related person or not, all this need to be taken care of. This is called as evaluation of supply. Now coming to the reverse charge. Reverse charge mechanism. So what is reverse charge mechanism? Now we have a forward charge. In the forward charge is that charge in which the supplier collects the GST from the recipient. The supplier is responsible for paying GST and has an option to collect the same from the customer. The GST so collected, he has to pay it to the government after netting off the input tax credit. He has to deduct the input tax credit, and the remaining he has to submit to the government. Now, government will be there, business will be there, customer is there. So, from the customer, the businessman delivers the services and collect fee as well as GST from the customer, and he will pay back to the government. So the business person will be acting as a mediator between the customer and the government. So this is called as a forward charge in GST. We have a reverse charge in GST also, like business, government, customer. The businessman will deliver the service to the customer, and the customer will pay the fee. So the businessman is collecting the fee, but here the customer he himself, because he is paying the fee, he also pays the GST to the government. So here the businessman is not paying the GST on behalf of the customer. He is collecting from the customer, paying to the government is a forward charge. Whereas customer, what he will do? He'll take the goods or the services. He will pay whatever he is supposed to pay to the businessman. The rest he has to pay the tax. The tax he himself will pay to the government. This is called as a reverse charge. So the reverse charge is a mechanism in which the supplier himself pays the GST on the transactions to the government by method of self invoicing. Right. So now uh, we need to take into the account what are the goods on which the reverse charge mechanism can be covered under section 9 subsection 3 and 9 under section 4 under the chapter 3 where the levy and collection will be taken place under the reverse charge mechanism. Now, section 9 subsection 3 refers to the payment of GST on reverse charge mechanism by a registered supplier on the supply of specific category goods and services as notified by the government. Here you can see the list of the specific goods like cashew nuts, beedi wrapper leaves, tobacco leaves, silk yarn, supply of lottery. All these are the were defined under section 9 subsection 3. Now coming to the section 9 subsection 4 deals with the application of reverse charge in case purchases from an unregistered dealer. So, what is applicable compliance in respect of reverse charge? First thing is, as per section 31 of CGST Act 2017, under the Rule 46 of the Central GST Rules 2017 stated that every tax invoice has to mention whether the tax in respect of supply in the invoice is payable on reverse charge. So whatever which is payable on reverse charge supposed to be mentioned according to the rules 46 under the CGST rules 2017 and he has to mention in the tax invoice. Second, maintenance of accounts by a registered person. He has to compulsorily has to maintain the books and records so that he can be attracted payment of tax on reverse charge. The next amount which is payable under the reverse charge shall be paid by debiting the electronic cash ledger. So he need to have a cash ledger. Uh, cannot be discharged by using input tax credit. Reverse charge mechanism cannot utilize the deduction regarding to the input tax credit. Now coming to the invoice level information. In respect of all supplies attracting reverse charge, rate wise are to be separately, furnished separately in the GST return 1. Now advance paid for reverse charge supply is also leviable to GST. Now in case of purchases which are made from unregistered dealer, so here what is the reverse charge? Here if you are purchasing the goods from the registered dealer, so GST can be collected from the recipient and pays the same to the government. And after taking deduction of input tax credit. But the purchases which are made from unregistered dealer taxable on reverse charge basis. So here what do you mean by reverse charge? Payable by a person who purchases the goods from unregistered dealer or a seller and not the supplier. Okay. This is covered under Section 9, Subsection 3 of GST Act. So, whatever the provisions which are applicable, as if the purchases are made from a registered dealer, all that is applicable as it is. Now, we have certain conditions also to be taken care of. What are those conditions? First, there should be a supply of goods or services. The supply should be in respect of taxable goods or services. Supply must be by an unregistered person. Supply must be to a registered person. Supply must be an intrastate supply, as compulsory registration is required for interstate sales. Okay, then you have to see to it the purchases are 5,000 per day from unregistered supplier will not attract GST. In other words, there is a reverse charge on buying from unregistered dealer if you are dealing with unregistered supplier and making a payment above 5,000 rupees. In such case, a reverse charge is applicable. Right? So, this is relating to the reverse charge. Now, coming to the input tax credit. Let us discuss about the input tax credit. So before to start with input tax credit, we need to know what do you mean by an input. Now, input means any goods or any substance, any raw material. Okay, what are the essentials need to be present in that input is it should be goods, but it cannot be capital goods. It should be used or intended to be used by the supplier. And it is for the sake of business. You are doing it for the furtherance of the business or in the course of business. So, and it is not necessary to receive inputs in the factory or to any place of business. Only necessary is that they must be used by the supplier. So these are essentials which are required under the inputs. This is related to the goods. Now we have to talk about the service. Service here is input service. Any service which is used or intended to be used by the supplier in the course of a business or furtherance of the business. Even it also contains certain essential ingredients. Those are input service includes any service. Input service must be used by a supplier or intended to be used by the supplier. Input service must be used in the course of or furtherance of business. So all these are come under the input tax credit. Now we have the capital goods also. Now capital goods means the goods, the value of which is capitalized in the books of accounts of the person claiming the credit and which is used or intended to be used in the course of or furtherance of business. Now, what are the essential ingredients should be present in the capital goods? First is value of capital goods must be capitalized in the books of accounts. Now, whenever a person required to be capitalized, he has to prepare his profit and loss account and a balance sheet for the financial year. The expenses incurred on the procurement of inputs, input service, or any other items which are charged to the profit and loss account. On that ground, so that these items have accrued during the financial year. Whether intended to accrue in more than a financial year, the expenses incurred on such items should be capitalized. Next, the value of such items also need to be shown in the balance sheet as a capital asset or a fixed asset. So capitalization means the value of goods which is shown as a fixed asset as against the capital profit and loss account, that need to be known as a capital asset. Now capital goods must be used or intended to be used by the supplier or for the course of business or furtherance of business. These are the things which need to be taken care of. Now, what is the eligibility criteria for availing the uh, input tax credit? So eligibility criteria also we need to take into the account. First, he should be a registered person. So supplier should be a registered person. Next, inward supply. He should supply into the business. So receipt of the goods or a services or a both, whether by purchase or a requisition or any other means without consideration, should be received. The recipient has to receive. He should be a registered person. It should be an inward supply. These two things which we have to consider under the input tax credit. Right. The next we have to discuss relating to so whatever may be the inputs or input service or capital goods on which the supplier wants to avail the input tax credit, either it should be used or intended to be used furtherance of the business. That need to be taken care of. The next, he has to see to it that electronically the credit ledger also he has to maintain, because whatever may be the ITC to be credited or debited, that is being done through this electronic credit ledger. So even that he has to maintain. Now, what are the conditions he has to take for input tax credit? First condition, possession of tax paying document. He should have a tax paying document. So first is invoice issued by supplier of goods or services. Either the supplier should be issued or the recipient supposed to be issued. So both. That means invoice issued by supplier, invoice issued by a recipient. Next, a debit note issued by a supplier, a bill of entry or a similar document prescribed under Customs Act, a revised invoice, a document issued by input service distributor. So all these are the documents which is required to claim the ITC, that is input tax credit. Now, whenever the goods, the receipt of goods or services or both, if it is being recipient has been received, then it should have a mention in the books that he has received. Or he may be received in installments also. So either the completely he might be receiving or an installment he may be receiving, or deemed receipt of goods. So sometimes they'll see to it that the goods delivered to the recipient or other person on the direction of such taxable person, whether acting as an agent or otherwise, whatever the name called or the document or the title or whatever may be. So here it is deemed to be receipt of goods. That is also will be taken into the account. The next, actually the tax should be paid or credited to the appropriate government. So whatever the input goods which you have received on which the tax might have credited to the appropriate government. The next here is in case the, the reversal of the credit, whatever you have made, that can be made not within 180 days. So you might be paid now, within 180 days you can reverse it. So the amount of goods or services or both can be reversed within a period of 180 days from the issue of invoice. The next, they'll take into the account a reverse credit can be claimed on payment. So unless you have not paid, you cannot claim it back again. That is to be taken into the account. You have to file a return. If at all a depreciation has been claimed on tax component or ITC not allowed, even that is also need to be taken care of. The time limit for availing the ITC that is been given, the filing of return under section 39 of the whatever the month following the end of the financial year that you have to take into the account, or filing of annual return. Even that is also need to be taken care. Now the next coming to the apportionment of ITC, that is input tax credit, and blocked ITC, input tax credit. Now we need to know how proportionate ITC shall be available. Now whether the goods comes under a zero rated supply. So here whatever may be the goods which are partly used for making the exempt supplies, including zero rated supply, or partly for taxable supplies. So first of all, the zero rated supplies can be taken by registered suppliers. So that we need to take into the consideration whether it is exempted supply. Exempted supply you need not uh, consider for the input tax credit. At the same time, the zero rated supply also, there you cannot claim input tax credit. That we have to consider into the account. The next we have to see what is the blocked credit. Now motor vehicles and conveyances. Now for transportation of goods, for making or following taxable services, or a vehicles for conveyances, transportation of passengers, imparting training on driving, flying, navigating, such vehicles or conveyances, here the restriction on availing ITC, that means input tax credit, cannot be levied on such goods. The next here, like for an example, a car driver, what he will do, he may be teaching or training the driving for the customers. Maybe he has a driving school. He's allowed ITC on cars purchased for use in teaching the driving. So automatically here what happens is he's doing a business. He has purchased the car. Why? Because he can impart the training to the customers. So training is his business. Then car is a must for them, because without a car he cannot have a driving school. In such cases, he can claim input tax credit. Whereas, like any businessman purchase the car for, probably for his own purposes, he might have purchased the car. It is not for the sake of a business. In such a case, that car cannot be claimed under input tax credit. But a vehicle which has been purchased for transporting the goods from the business to the market, or from the market to the business, maybe it is the vehicles which are being you can say it is for the transportation purposes. If it is being taken, in such cases they can use input tax credit. Now the next point is food, beverages, outdoor catering, beauty treatment, health services, cosmetic and plastic surgery. These things, if you take into the account, you need to see what purpose they are using this. Like a caterer for a wedding gets a sweet dish which is supplied by a specialist in the desert, he will be allowed to charge input tax credit. So, what purpose he is using it? That is more important. That should be taken care of for availing the input tax credit. The next is membership of a club, health, fitness center, etc. Even that there also whether they can be listed under a negative list or it should be considered for claiming the input tax credit. That you need to consider. The next, rent a cab, a life insurance or a health insurance. So in this case also, the government has made an obligatory for an employer to provide any of these services to his employees. Then you can claim input tax credit. Or inward supply of these supplies is used for making an outward taxable supply for the same category or as an element of a taxable component or a mixed composite or a mixed supply. In such cases, they can claim input tax credit. Other than this, they cannot claim. Travel benefits to the employees on vacation, such as LTC, usually they say, the leave. In such cases, or the home travel concessions, that also they can see to it. It is for the enjoyment purposes, you cannot avail input tax credit. Works contract services for construction of immovable property. Now, this is to be claimed when immovable property like plant and machinery, if you take, plant and machinery is used for furtherance of the business. In such case, they can claim input tax credit. It is for any other purpose, they cannot claim. The next, they also need to see to it that whatever the inward supply is receivable by a taxable person for the construction of a immovable property. Now, other than the plant and machinery, probably like sand may be used, bricks may be used. What you're doing, the sand, brick, iron, cement, all that is the material which you are using for the construction of a immovable property like a house. So definitely here what happens is these are being for the residential purposes you are using it, but the materials are being supplied on which any tax if it is paid, that you cannot claim input tax credit because it is for the residential purposes you are using it. If it is not for the residential purposes, like it may be an office, then office, the building, without the building the office cannot be run. So in such a case they can use it for input tax credit, but it is not for immovable property, like it is not used for the sake of business. The next here, inward supplies which is being paid, the taxes which are paid under the composition scheme, there also you have to avoid, you cannot pay. Okay. The next, non-resident taxable person except whatever the goods which are imported by him. Then personal consumption